Guys, last week we were expecting the movement of the S&P 500 in between 4497 and 4355. Now, other than this, on Monday we have seen a bull candle. There is the upward movement because of the formation of these the two candles. However, any bullish reversal will be limited to 4497, and then it will come down. It will come down to what? It will come down to 4355, and this 4355 is what we were expecting. And but because this the gap down open came on this the Friday. Because of the gap down open, okay, we have seen a movement up to 4335. However, it moved back and it closed above 4355. So there was only this the $20. Okay, this is what we have missed, $20. Okay, otherwise the movement was well within 4497 and 4355. And if you notice, this was the previous S&P 500 technical analysis, and it was clear that a maximum downward movement is expected up to 4355. And last week I have defined the conditions for the bullish movement and the bearish movement. Okay, so bullish movement would have come only if the S&P 500 would have moved to 4527, and if it would have sustained above 4527, then only the bullish movement. Else there will be no bullish movement. It will be only the bearish movement, and any reversal will give you an opportunity to sell, to short sell, or to buy put options, and then the S&P 500 will give up. It will come down. So last week the movement was as expected and as predicted, but the question is that what is this the true bearish movement? Okay, why I am calling it as the true bearish movement, and why, okay, this the whatever it was, okay, this is a downward movement, and I did not call this as a true bearish movement. Okay, the reason is that now we have seen a confirmation, okay, a confirmed crossover, bearish crossover in the moving averages. Okay, and this is something that has happened after 3 or 4 months. March 2023. Okay, yes, we have seen this thing happening in last March 2023, that there was the bullish crossover in the moving averages, and then it entered into the true bullish movement. But now because of this moving averages, the crossover in the moving averages, now the S&P 500 has entered into the true bearish movement. However, the Dow Jones is still okay, means there is still not there's a bearish crossover in the moving averages. Okay, once that happens in the Dow Jones, then Dow Jones and S&P 500, this means that in that case the direction, okay, or we can say that the true bearish movement will be applicable to the entire US stock market. So I will discuss this thing in detail. Okay, what is this the true bearish movement? Okay, and how did it came? Okay, and when exactly, okay, it came. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. Now guys, I am going to discuss the agenda of this S&P 500 technical analysis, and this S&P 500 technical analysis is applicable from August 21st, 2023, which is Monday, through August 25th, 2023, that will be Friday. So from Monday through Friday, whatever is going to happen in the S&P 500 and in the entire US stock market, I am going to discuss in this the S&P 500 technical analysis. Now the first point of the agenda is the S&P 500 technical analysis on the weekly chart. Okay, so last week, see why we have seen this the bearish movement. Okay, one of the reasons was the weekly chart. Okay, because the closing of the S&P 500 last week was below one of the moving averages. So that has confirmed that now there is weakness, any reversal will be limited, and there will be the downward movement. Okay, as simple as that, no rocket science. Okay, similarly we are going to see that means for this there's a previous week, okay, what has happened, and again, okay, similar thing has happened. Okay, so again the S&P 500 on the weekly chart has closed below one of the most important moving averages. So again it will be the same, that there will be a bullish reversal, it will be limited, and then it will fall. Okay, this kind of movement. Okay, again, no rocket science. Now comes the second point of the agenda of this SP500 technical analysis, and now we are going to discuss here the VIX, okay, volatility, dollar index, and bond yield. Okay, now this is very important. Okay, technically this is very important because something, okay, has happened after 5 months. February 2023. Okay, 5 or 6 months. Okay, this thing has happened, and now these three, okay, volatility, dollar index, and bond yield. Okay, they are okay aligned in the same direction, okay, or and also through the technicals, okay, they are going bullish. So we need to discuss okay these, because the impact of these three, okay, it is clearly seen on the entire US stock market and in all of the indices, S&P 500 or Dow Jones, or this the Nasdaq, okay, or the ETFs of these indices like QQQ, etc. Okay. This is so okay. So this will be the important part, right? Then the third point of the agenda is the S&P 500 technical analysis on the daily chart. Okay. So daily chart, as okay, as you can see that clearly, okay, there is this the bearish movement, okay, it is coming down, okay. Now question is that the S&P 500, okay, will further come down, and will there will be okay this like continuous, okay, the red candles? No, okay, that is not going to happen, okay. Because as of now S&P 500 is going to hold, okay, at some level that I'm going to define, okay, in the fourth point of the agenda, okay. And once it holds and sustain, and there are two conditions, these two conditions must be fulfilled. When that happens, okay, then there will be a reversal. Now this reversal, okay, again the reversal will be of okay, either it will be a very short reversal, okay, or there will be a reversal that will be there for like 4 days or maximum for a week, okay. This the reversal, whether it will be a short reversal for 1 or 2 days, or whether it will be okay this kind of long reversal, okay, for a week or so, it will be defined, and it will depend on these two conditions, okay. So so on the daily chart, okay, I will also tell you that okay, as of now the stochastic RSI, okay, it is trading at 0, okay, and that is the most important part, okay, it is trading at 0. And there was a purpose, clearly there was a purpose to close the S&P 500 below the previous closing price, so that okay, they can look for this, you know, the weekly, okay, means the bullish reversal for a week or so, okay. Let's see, okay, how it is going to work. Anyways, so technically, okay, we will talk about the stochastic RSI in detail, both of the channels K and the D channels, okay, and the probable reversal of very heavy bullish reversal, okay. Then comes the fourth point of the agenda, and the fourth point of the agenda is the S&P 500 probable movement from August 21st, which is Monday, through August 25th, that will be Friday. So what is going to happen in the S&P 500 from Monday through Friday, okay, that I'm going to discuss in this the fourth point of the agenda, okay. Means this is the same thing, that where exactly we are expecting, okay, the S&P 500 to come, okay, and what will be the new, you know, support levels, and now any reversal will be limited to what, and then from okay, from which particular level the S&P 500 will give up, okay, and whether there are any chances that this true bearish movement might change again, okay, into the true bullish movement, okay. Everything I'm going to discuss in this the fourth point of the agenda. And one more thing, guys, I strongly recommend you to watch this the entire S&P 500 technical analysis, because I discuss a lot of things in each and every section, okay. So if you think that I'm going to discuss the probable movement only in the fourth part, no, that is not the case. I will discuss some part, okay, in this the weekly chart, okay, bond yield in here, okay. So each and every part or each and every section is interconnected, and each and every section contains, you know, tons of valuable information. And one more thing, guys, I would like to add a disclaimer to this S&P 500 technical analysis, that this S&P 500 technical analysis is not a financial advice in any form or in any manner. And because I do not know what you are going to trade into or how you are going to trade, this means that whatever profits and losses are going to happen, okay, this will be all yours. So guys, once again, if you have not yet subscribed to my YouTube channel, then you can subscribe to my YouTube channel and hit the bell icon. And if you have not yet joined my Patreon community, then you can join my Patreon community, and you will come to know everything, like what is going to happen in the US stock market, what is going to happen in the S&P 500 even before the things happen. Now guys, I am going to discuss the first point of the agenda of this S&P 500 technical analysis. And the first point of the agenda is the SP500 technical analysis on the weekly chart. This is the weekly chart. Okay, let me write it down, weekly chart. Weekly chart means that the one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. Okay, so let's first analyze the candle itself. Okay, a good candle, a good red candle, or a heavy red candle. Okay, this so as such there is no defined shape of this the candle. Okay, but because it is a heavy bearish candle, this means that the bearish sentiments are there and the bearish sentiments will be there. Okay, as simple as that, nothing, okay, nothing else. Okay. And when we look into these technical indicators, so technical indicators, as of now, yes, the most important part is the MACD. MACD is not bearish, okay, but most likely next week, okay, as early as on Monday, okay, the MACD will turn bearish. Now when the MACD will turn bearish, stochastic RSI is already bearish. Okay, this means that this will be the direction of the S&P 500. This will be the direction of the entire US stock market. Okay. So does that mean that every day or every week you will see these are red candles? No. Okay, this is not how the stock market works. Okay. So I will define the movement in detail in the last point of the agenda. Okay. So MACD, this thing, yes, there is a condition that the MACD might not turn bearish. That will happen only and only if there comes a strong bullish reversal or strong bullish candle. In that case, the MACD will not go bearish, rather it will continue bullish, and in that case the stochastic RSI will remain bearish. Okay, it will not turn bullish next week. Okay, but yes, this might change the movement in the S&P 500 in the next week. Okay, that will be the last week of the August. Okay, that can happen, but we will talk about that, okay, next week. Other than that, divergence, okay, and everything is fine. Yep, so technicals looks good. There is one more important thing, and that is okay, it is still sustaining through these technicals. The most important part is the closing of the S&P 500 below this the moving average. Okay, this is the most important part. And if you notice that last time we have seen, okay, this thing March, last week of March, okay, this is the month of August. Okay, so it's been 5 months, almost 4-5 months. Okay, and after 4-5 months we have seen, okay, this kind of closing. So this means that this closing is very, very significant. Okay, very significant in the manner that now the S&P 500 is further going to, okay, come down. Okay, and when it comes down and when it hits a particular level, okay, that particular level, okay, I'll define in the last point of the agenda, but as of now, okay, you can like look for 4291 and 4265. Okay, this will fulfill the requirement. Okay, so as of now this is the zone. Okay, so yes, the bearish movement. So the bearish movement, okay, it is expected to continue because of the closing of the candle, okay, below this the moving average, and it will have to fulfill its, you know, obligation, right? So 4291, 4265 will be there, and once it hits and once it settles here, okay, then only we can expect, you know, some good bullish reversal, right? So in short, what we can say is that the S&P 500 is as of now the S&P 500 is 70% bullish, 70% bullish on the weekly chart. So remember, it is not 100% bullish, it is only 70% bullish. Okay, yes, it is bullish on the weekly chart, bullish on the weekly chart. I'm not talking about, and I'm not doing the technical analysis on the daily chart. Daily chart, it is absolute bearish. Okay, but on the weekly chart, okay, see, weekly chart means the long term picture, okay, the big picture, right? So you are seeing this the one candle. This one candle is the summation of these 5 days, Monday through Friday, whatever has happened. Okay, this the one candle represents, okay, that the movement, okay, of these 5 days. So that is why, okay, so this the weekly chart means this is a big picture. So yes, more weakness is expected to come, okay, but that weakness is subject to, okay, these are two conditions that I will discuss in the last point of the agenda of this S&P 500 technical analysis, right? So guys, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to join my Patreon community, then I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the second point of the agenda of this SP500 technical analysis. And the second point of the agenda is the VIX, that is the volatility, the dollar index, okay, denoted by DXY, and the bond yield, okay, 2-year and 10-year bond yield. Okay, so at first I'm going to discuss the VIX, the volatility. Okay, if you look into this the wicks, okay, the chart of wicks, then what you are going to notice is that there are two closings, two consecutive closings above the Ichimoku cloud. Okay. Other than that, if you look into all of these are technical indicators, okay, see, although volatility cannot be accurately predicted on the daily chart, okay, there is a problem on the daily chart, okay, but when the all of the technical indicators on the daily chart are aligned in the same direction, then yes, then it can give us this the more precise information, right? So now when you look into these the technicals, then all of the technicals are aligned in this the bullish direction. Okay, everything is bullish as of now in case of this the volatility. Okay, what it means, this means that on the this the daily chart of the volatility, okay, the volatility has gone bullish. Okay, so when the volatility goes bullish, then what happens? The stock market, okay, it comes down. And is it like it is 100% true that every time when the volatility will move up the stock market will come down? No, it is not. Okay, that is why we look into the other factors including the volatility, dollar index, bond yield, okay, and some other things. Okay, but when the volatility okay, see, when the volatility it trades absolute bullish or absolute bearish, okay, then yes, then it kind of confirms, okay, not 100%, but it almost confirms, okay, that now this is happening and what we can expect in this the stock market. Now if you look into this the volatility chart, okay, so now this kind of bullish movement in the volatility is, it has come after like March again. Everything, okay, whatever is happening in this the stock market, it is happening after March, so after 4 5 months. Okay, so this is okay, this is good, and this is normal. Okay, this is a normal behavior of the stock market, that now the stock market is giving up, it is going bearish, or in simple terms we can say that it is correcting itself, as simple as that. Okay, so this is with the volatility. Now one more thing, that volatility, okay, it has to sustain, and even if the and even if this the volatility, even if it okay, even if it goes bearish, but if it sustains above this the Chimoku cloud, okay, then also the correction will be in force in the entire US stock market. Now comes the dollar index. Okay, dollar index DXY. So dollar index, now you can see that the dollar index, okay, is bullish, it is moving up. Okay, what does it mean? This means that the dollar currency, okay, the dollar is getting stronger, okay, against British pound, okay, euro, and these the Canadian dollars, Australian dollars, means all of these are currencies. Okay, the US dollar is getting stronger, okay, against these the currencies. But in terms of these are technicals, what we see is that when the dollar index, okay, it goes bullish, okay, and if this the bullish dollar index, if it is supported by others like wicks, volatility, bond yield, etc., in that case what happens is the stock market goes bearish. So now you can see that the dollar index was moving up and up, but the stock market was still, okay, means when the dollar index was moving up, still the stock market was moving up, right? Because what happened is that at that point of time the volatility and the bond yield, okay, they were not supporting the dollar index, but now the dollar index is bullish, VIX volatility is bullish, it is bullish, and we will look into the bond yield. Okay, but now because they are bullish, this means that as simple as that means this the stock market, okay, it is heavily bearish. But there is a catch. Okay, the catch is that the dollar index is going to hit its previous high, and when it reaches to its previous high or reaches around the previous high, then it will hesitate to move up. Okay, when it will hesitate to move up, it will come down, and if the volatility also comes down at the same time, then we will see a reversal, a bullish reversal in the stock market. Now this is the bond yield. Okay, this is a 10-year bond yield, and the similar thing is happening in the 2-year bond yield. If you notice, bullish. And if you look into through all of these are technicals, then the bond yield, okay, it is clearly bullish. Now the bond yield is bullish, dollar index is bullish, volatility is bullish. Okay, this means that the stock market is bearish. Okay, so there might be some news or some information that because this is happening or that is happening, okay, because of this the stock market is bearish. No, okay, but in but because I'm here, okay, I'm doing this the technical analysis, I'm looking into the charts and the technicals. So based on the charts and the technicals, okay, I'm telling you that what is happening. Okay, there might be some the logical reasons, okay, through the news, okay, or some the logical economic reasons. However, this is the chart analysis, the technical analysis. So if our technical say this thing is happening, means this thing is happening, and this will happen, right? Now, one more thing about this, the okay 10-year bond yield. If you see that the 10-year bond yield is okay, it actually hit its previous high. So in recent years, like in last many years, okay, we have not seen the bond yield to move up. One more thing, okay, remember that bond yield, okay, bond yield moves up means that the bond prices, it generally, okay, it goes against the bond price. So now, as of now, what is happening is that this was a previous high, okay, this was a recent high. Now this the 10-year bond yield, it will try to breach this high, okay, this is the recent high and the previous high. As soon as it breaches this the high, closes and sustains above this the high, okay, then it will start to move up further, means more bullish. When this happens, then the stock market will go more bearish, okay. So now we have the dollar index, okay, we have the VIX, and we have this bond yield, okay. All of these are aligned bullish, and yes, there and now there is this the point, okay, a point where these three things, okay, all of these or either two of these are going to take a little break, and that will give a little breather to the stock market. And again, the S&P 500, okay, it is already trading at these the saturated technicals, so this makes sense, okay. So these will come down a little, stock market will move up a little, then there will be a bullish reversal in these, and then the stock market will see a bearish reversal. Okay, simple, very simple, no rocket science here, right? Now guys, I have one more information to share with you, that if you want to learn this, the price prediction, the movement, the technical analysis, okay, and if you want to predict, you know, everything before it happens in the stock market, then you can participate in my S&P 500 knowledge transfer program. So this the knowledge transfer program is not just for the S&P 500, but it is applicable to all of the indices, to all of the stock markets, to everywhere. So it doesn't matter, okay, whether you are trading in the US stock market or the European stock market, because technicals are technicals, they will work everywhere, okay, in all of the indices and in all of the stocks, right? So if you want to learn the movement, the hacks, strategies, trend analysis, manipulation, technicals, predictions, support and resistance levels, okay, then you can participate in this the S&P 500 knowledge transfer program, or this the stock market knowledge transfer program. And if you want to know, or if you want to understand that what is covered in detail, then this is my Google spreadsheet, okay, you can use. And in my Google spreadsheet, okay, you will see that what actually I cover, okay, what I teach, what I share, okay, and everything, and how the strategies, okay, the trading strategies, the hacks and everything, okay. Other than that, the options calculations, okay, and that is support and resistance levels. And you know that my support and resistance levels, okay, they are very well respected in the stock market, and the stock market, the S&P 500 or the Dow Jones, okay. And you will see that the movement most of the times, okay, there comes an accurate hit to these support and resistance levels. These are support and resistance levels and everything, okay. So this is the content of this the S&P 500 knowledge transfer program, okay. These are important terms and conditions, and these are, you know, some of these snapshots, okay, or you know, the people who have availed this the program, right? So guys, whenever you want to participate in my S&P 500 knowledge transfer program to learn the movement, price predictions, the technicals, the technical analysis, and you want to self-sustain, self-reliant, then so you can drop me an email. This is my email address. And guys, once again, I have given the link in the description of the video and also in the comment section, so you can visit that link. And if you have any questions, then please feel free to reach out. Now guys, I'm going to discuss the third point of the agenda of this S&P 500 technical analysis. And in this, the third point of the agenda, okay, I will do the technical analysis of the SP 500 on the daily chart. Okay, this is the daily chart. So now on the weekly chart, what we have seen is that the S&P 500 is 70% bullish. Okay, bullish means in the long term, okay, means if we look into like for a quarter, okay, for 6 months or so, then it is still holding and it is still 70% bullish, okay. But in the short term, what is going to happen and how the stock market is going to behave, okay, that will be defined through this the daily chart, right? Now let's see what is happening on this the daily chart. So the very first thing, okay, as usual, let's analyze the candle. if you look into the candle, okay, uh, as such the shape of the candle is not defined. Okay, it is neither a doji candle, okay, nor this the morning star, okay, nor this the spindle, okay, or means these are, you know, many types of the candles. So the shape is not defined. Okay, however the body is heavy, and this is a body bullish body, okay, heavy. Other than that, it's a technical bullish candle, okay, and because this is a special kind of candles, okay, candle, okay, that often you know, says that whenever this candle forms, okay, in this kind of trend, then this happens. Okay, but as I mentioned again, okay, earlier, that there will be two conditions. These two conditions must match, okay, in order to see, okay, this kind of the movement here, right? So as of now, the only interpretation of this the candle is that this candle is supporting a reversal in the S&P 500. Okay, however, this would have been like, you know, 100% confirmed if the Dow Jones also, okay, gave its, you know, if the Dow Jones have also, you know, given its support to the S&P 500, but because the Dow Jones failed to give this kind of candle, and the Dow Jones has closed like 0.07% above the previous price. Okay, so the 100% confirmation, okay, it is not coming through the Dow Jones, means the support is not coming through the Dow Jones. However, the Dow Jones is now supporting the bearish movement. Okay, this means that although there are these the bullish you know, conditions, okay, bullish this thing, okay, from this the candle itself, but these bullish sentiments, okay, bullish confirmation will be suppressed by the Dow Jones, okay, because Dow Jones is now supporting the bearish movement because it closed above the previous you know, closing on the Thursday closing, and it was like plus 0.07%. Okay, so although there will be bullish sentiments, but these bullish sentiments will be normal or very little or very limited, as simple as that, right? Now let's talk about the technicals on this the daily chart. Okay, in terms of the technicals, if you see clearly, okay, bearish crossover, there is a bearish crossover in the moving averages. So now what happened is that on August 16th, okay, in my first update, okay, I have informed my Patreon community members that if the S&P 500 remains below 4446, okay, on August 16th, then the moving averages will give a bearish crossover, right? So I have informed my Patreon community members very well in advance that if it remains below 4446, in that case there will be a confirmed bearish crossover and then more bearishness, as simple as that. And we have seen that on this the Wednesday, okay, the S&P 500 was struggling to move up. At most it moved up to 4449, and then it gave up, and again it was struggling to move beyond. So now because of this the bearish crossover, along with these the other technical indicators, okay, which are already bearish, okay, this means that the S&P 500 as of now is 90% bearish, not absolute bearish, but 90% bearish on the daily chart. Okay, 90% bearish. So now what is the most important part here, okay, on this the daily chart? So one thing I've discussed, that is the bearish crossover in the moving averages, a confirmation of the true bearish movement, right? Now the other important part is the stochastic RSI. If you notice, the stochastic RSI is still trading, okay, it is trading at 0, and the MACD is also, you know, bearish. Stochastic RSI is bearish, but stochastic RSI is trading at absolute, means I will not say stochastic RSI, but the K channel of the stochastic RSI is 0.00. It hit the 0.00 on Thursday, and in my final update on Thursday, I've clearly mentioned that how this the 0.00 is going to impact. And generally what happens is that whenever there comes this the bearish movement, okay, means a normal bearish movement in the bullish movement, when there is the true bullish movement is in force. In this true bullish movement, when there comes the bearish movement, as soon as the K channel, okay, it hits the 0.00, there comes an immediate reversal. Okay, however, in this case, this was the special case that the S&P 500, okay, it came down, it entered into the true bearish movement, and then the S&P 500, then the K channel of the stochastic RSI, it hit the absolute 0. Okay, now it hit the absolute zero in the true bearish trend. This means that this, the immediate reversal, it might not come, or it might not be seen as expected like a very heavy bullish reversal. Rather, there may be the continuation of the bearish trend, okay, and the S&P 500 will remain bearish, will remain weak, and will keep on giving the K equal to 0.00 until and unless the D channel, okay, it also becomes 0.00. Okay, for those who do not know about this stochastic RSI, we have the K channel and the D channel. Okay, so D is the moving of the so D is the moving average of the K. Okay, now yes, so when the K becomes 0 and the D becomes 0, okay, both of these become 0, then only there comes a bullish reversal. That bullish reversal is sustainable for like minimum of 2-3 days or up to a week or so. Okay, so for now the movement, okay, it says that, or it looks like that as of now, and this was the same thing, that only when K and that a true bullish reversal with 100% confirmation comes only when K and D channels become 100 each, which might take 2 more days. Okay, this was on Thursday, so Friday we have seen. Now just on Monday, if there comes a red candle on Monday, okay, then most likely, I'm not saying 100% because the calculation I have not yet done this, the calculation for the stochastic RSI. Okay, so if there comes a red candle on Monday, in that case most likely the D channel will also hit 0, and when the D channel hits 0, then K will be 0, D will be 0, and a perfect scenario for a bullish reversal. However, okay, just based on the calculations, okay, if the calculations still allow, okay, some or more scope, okay, in this the reversal, for the reverse, not the reversal, for the D to become 0, in that case it will become 0 on Tuesday. But for the D to become 0 on Tuesday, there must come a red candle on Monday. It must remain red. As soon as it goes green, even if like plus 0.01%, as soon as it goes green, it will simply come out of this the 0. It will become non-zero. K will be non-zero, D will be non-zero. In that case, more bearish movement, more fall in the stock market, right? Because it will simply create the room. That is why I'm saying that as of now the Dow Jones, okay, it closed at plus 0.07%, very minute, okay, and because it has closed as green, 0.07%, this means that now in case of the Dow Jones, the K and the D channels are non-zero, and that is why more bearish room is created in the Dow Jones. Okay, and now just okay, a trigger, this is a bearish trigger, and then there will be heavy fall, right? So the K and the D, it will be known only on Monday when the stock market opens, and when okay, when it try to trade, or when it trade bearish, okay, then only we will come to know whether the D channel will become 0 on Monday or not, or if it is going to become okay 0 on Tuesday. So if you are my Patreon community member, okay, then I will update you immediately, okay, just after 1 hour, okay, that whether it is going to become 0 or not, and accordingly, okay, you can plan your trades. Means you can simply book your profits, or you can place your orders here, okay, in order to book your profits, bearish profits, and then let it reverse again, go for this selling, and then again enter into this the profitable trade. Anyways, so this is with the K channel and the D channel. Okay, so as of now I hope you understand that it is 90% bearish, okay, and reversal is there. Yes, definitely a reversal is there, but whether the reversal will be strong or whether the reversal will be limited, okay, that is so this thing is very much subjective. And guys, if you're looking for these the daily updates, the daily analysis of the S&P 500 from Monday through Friday, then let me tell you that how you can join my Patreon community. So I've given the link in the description of the video and also in the comment section in order to join my Patreon community. So when you use that link, okay, so this is my Patreon page, and on this my Patreon page, okay, there are these are 2 tiers, okay, or 2 levels you can say, and both are same daily S&P 500 updates, okay, but this is for non-US and Canada residents. This is the daily S&P 500 updates for US and Canada residents. And until last week there used to be, okay, another tier, that was the stock market opportunities. Okay, so what is the stock market opportunity? Stock market opportunities means that I give the opportunities in the premium stocks. So I do the technical analysis in the premium stocks like Apple, Tesla, PayPal, Airbnb, okay, UNH, okay, Bank of America, Microsoft, okay, in these the top 30 or top 40 stocks of the US stock market. I do the technical analysis, and accordingly, okay, I give this the stock market opportunities, okay, once in a week, minimum 5 to 10 opportunities to my Patreon community members. But now these the stock market opportunities minimum 5 to 10 every week, okay, these are the part of the daily S&P 500 updates, okay, that I give from Monday through Friday. So when you subscribe for either of these, okay, then you will get the daily S&P 500 updates from Monday through Friday, each and everything, pre-market update, final update, first, second, third, fourth update, as well as the stock market opportunities, right? And guys, if you notice that many people have joined my Patreon community and they are getting these the daily updates, the daily analysis for last many days, for last many weeks and months. So everything from Monday through Friday, as well as the stock market opportunities. So if you also want to join my Patreon community, and if you also want to get these daily updates, the daily analysis of the S&P 500 from Monday through Friday, as well as the stock market opportunities, then I have given the link in the description of the video and also in the comment section. Now guys, I'm going to discuss the last point of the agenda of this S&P 500 technical analysis, and that is the fourth point of the agenda. In this, the last point of the agenda, okay, I am going to give you the probable movement of the S&P 500 in the coming week. So guys, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. So now, okay, a few important things here. Okay, Monday, Tuesday, Wednesday, Thursday, Friday. Nothing from Monday to Thursday. Okay, nothing important. Okay, in terms of the economic data or this the news. Okay. Friday will be August 25th. On August 25th, the Fed chairman, okay, the Federal Reserve chairman is going to speak. So I don't know like whether there will be a press conference, okay, or he's going to participate in an event, okay, where you know, he will be the guest. Anyways, the thing is that he is going to speak. Okay, now because he is going to speak means the stock market will be volatile, not just the US stock market but the global stock market, right? And why the stock market, the US stock market or the global stock markets will be volatile? The reason is that the FOMC minutes of the meeting. So the recently, okay, this the published FOMC minutes of the meetings. Okay, so this meeting we have seen that last month the Federal Reserve has raised the interest rates by 25 bps. Okay, last week, okay, I mentioned that within 2 days, okay, the probability of seeing another rate hike in the month of September, okay, it has increased from 3% to 35%, okay, within 2 days. Now after this FOMC minutes of the meetings was published, this the 35%, okay, it is now 60%. There is now 60% probability that the Feds are going to raise the interest rates. So very, okay, like in, you know, in very short period of time, okay, 3% probability has increased to 60% probability that the Feds are going to raise the interest rates in the month of September. Okay, and this looks, you know, a valid reason because recently the inflation, it has given a bullish reversal after 1 year. Okay, and there are other factors. Okay, so this was the FOMC. This was the summary of the FOMC minutes. So there were, you know, many of these things. Okay, detailed. This was the link to the FOMC minutes of the meetings. Okay, so the very first thing was that the recession is there in the picture. The Federal Open Market Committee members, okay, they are still seeing the recession, that the recession will be there. So this means that recession was delayed, it was not cancelled. As simple as that. Means now 100% confirmed that the recession will be there. Recession is there. Additional tightening will still be there. This means that the Feds may raise the rates in the September. Okay, and it will be more than the expected. Earlier they were expecting like just 1 rate hike, then 2 rate hikes. Okay, now 3 rate hikes. Okay, so rate hikes, back to back rate hikes. Okay, so this the back to back rate hikes, it is actually, okay, it is going to trigger, and this is the reason for the recession. Okay, now the nothing much has changed and the labor market is still strong, but signs of, you know, there are the signs that it is easing. Okay, and so everything was okay as was there in the previous the FOMC minutes of the meetings. Okay, so this time it has just confirmed that the recession, okay, simply that the recession is still there. Okay, it will be there, okay, it is confirmed. Okay, other than that, it has also kind of confirmed that the Feds are going to raise the interest rates. Now, because of this thing, okay, true bearish movement, the bearish crossover in the moving averages, so the true bearish movement is in force. But this does not mean that there will be back-to-back red candles. That is not possible. This is not how the stock market works. Okay. So now what can happen or what is going to happen? Okay. So the thing is that as of now, S&P 500 is not expected to breach the cloud or to trade below the cloud. Okay. Even if it does, or even if it gives like an intraday breach, then also it will be able to recover. Okay. Now the recovery of the S&P 500, it depends. So okay, let's say 4291. Let's stick to 4291. Okay, 4291. Okay, so when it was trading at this 4527, 4527. Okay, this was the level 4527. Okay, so this the 4 after 4291 comes the 4527. Okay, so when it breached the 4291, it sustained above 4291, then it was clear that most likely it is heading to 4527, and now the reverse cycle. Okay, so again, these are my calculated support and resistance levels. Okay, these are not the standard these are not the standard pivot levels that you can find through any technicals. Okay, that is not there. These are my calculated support and resistance levels. Okay, so as of now it closed at 4369. Okay, that's fine. This means that if there comes one more bearish candle, okay, on Monday. However, on Monday it will be a tricky movement because of the formation of this candle. This candle is giving a bullish push or a bullish, these are bullish sentiments to the S&P 500. But because the Dow Jones, okay, it has failed to give this kind of candle, so the Dow Jones is giving the bearish sentiments. This means that these bullish sentiments, these bearish sentiments, the mix result will be a limited bullish movement, a limited bullish movement. That will be the result. Okay, now when I say the limited bullish movement means as of now if it moves up, then the boundary of the Ichimoku cloud will itself, it will act as what we call as the resistance. Okay, so when I say the resistance, this means even if you forget about the boundary of the Ichimoku cloud, then also, okay, what is there in the picture? 4425/20. okay, now any reversal will be limited to what? Any reversal will be limited to 4425/20. okay, in between, okay, these the levels 4369, 4425. okay, there are a few more levels anyways, but let's stick to the major levels 4425/20. okay, yes, it is definitely, it is possible that it can give a reversal, but even before, okay, it can hit this the 4425/20. okay, it can give this the bearish reversal, definitely. okay, it is possible, right? But that will be known only when the S&P 500 comes into the session and the lower level charts, okay, the technicals will change, the technicals will generate their own values. okay, and accordingly we will come to know that what is this the new resistance level or the heavy resistance level, okay, that will force the S&P 500 to give a reversal rather than to hit the 4425. okay, so recently we have seen it was the 4467 was the level. okay, and it was struggling to move, okay, beyond this the 4467 level. okay, we have seen that any upward movement, it will be limited to 4467. it was, and it came down, so we were very much confident on the 4467, although it cannot be seen here, but it is through the lower level charts. okay, anyways, now it is not there in the picture anymore, it has changed. So now what I'm saying is that any bullish reversal will be limited to at max to 4425/20. okay, and because if it moves above 4425/20 and if it sustains, again it must sustain, if it sustains above 4425/20, in that case only it can try to move up, but in that case also any movement will be limited to the boundary of the Ichimoku cloud, and the boundary, it changes every day. Now any movement like 4425, okay, /20, now there is another, this the level, okay, that I believe that is like 4446, I guess 4446. So I am not confirming this the 4446, okay, but last time I have seen, okay, it was a 4446 or somewhere around 4446. okay, not exactly this. That will be the level that will limit this the bullish movement. okay, means even after 4425, okay, it will be very limited. okay, and then again it will give up, right? So now one more thing, guys, remember now, because the true bearish movement is in effect, the true bearish movement is in force, this means that any reversal will be an opportunity to go bearish, okay. When the true bullish movement was in effect or was in force, then any dip is an opportunity to go bullish. Similarly here, any bullish reversal will be an opportunity to go bearish, as simple as that, right? So now that you know that the bullish reversal will be limited, okay, and 4425 is the maximum and the standard point of reversal, okay. So now question is that if I'm saying that there will be a limited bullish reversal, so the limited bullish reversal will be to what level? The limited bullish reversal will be to 4396, 4396, okay. This will be the limited bullish reversal. Or if there comes a gap down open on Monday, if there comes a gap down open on Monday for any known or unknown reasons, in that case also the S&P 500 will try to move up because of this candle. It will try to move up, but because of the gap down open, it is already trading below 4369. This means that any bullish reversal will then be limited to 4371, okay. There is another level between these two, okay, that I will confirm only when the S&P 500 will come into the session, okay, on Monday. So because if it breaches the 4371, then most likely it will reverse from that, that level. Anyways, as of now, if there comes a gap down open, then you know it will be limited to 4371, okay, or at max to this a medium level, okay. And only if there comes in a heavy bullish movement, then 4396, and the best case scenario is 442520, okay. Now the problem with this the bullish movement is that why this the bullish movement, okay, it cannot be heavy, okay, or why we are not expecting, okay, a bullish or a heavy bullish movement. The reason is that as of now the K is 0, K is trading at 0, okay. D is still not 0. An absolute or confirmation or a good bullish reversal comes only when K is equal to 0 and D is also equal to 0. That is the case when we can say confidently that yes, there will be a good and a heavy bullish reversal. Or intraday there can come a very heavy bullish candle like 1%, 2%, okay, bullish candle, okay. But that will be known only on Monday, particularly, okay, at the time of closing. If it doesn't happen on Monday, means if there comes a red candle on Monday but still the D channel, okay, it is not 0, then most likely on Tuesday, okay, it will become 0. In that case the reversal will come, okay, on Tuesday. But now remember that because the K channel is already 0, okay, 2 consecutive days, 1 and 2, it is already the K channel is 0. This means that you must be very careful, okay, with this the bearish movement, because now the bearish movement will be limited, rather a reversal is requested or a reversal is expected, okay, not requested but expected. So bearish movement is will be, okay, normal. If you are already trading in this the bearish trade, then okay, this is the time to book your profits, bearish profits. Let the S&P 500 reverse, let the entire US stock market reverse, okay. When it struggles here, then go bearish again, okay. This so this will work for you, okay. You can book profits back to back. Now so this the K and D, whether the D becomes 0 or not, will be known only on Monday. And if you are my Patreon community member, okay, so I will update you on Monday, okay. Means as early as, okay, after like 1 hour, okay, and that will be 10:30 AM, I will inform you, okay, whether we are expecting this the D equal to 0 on that particular day or not. Because if the D is going to become 0 on this particular day, on Monday itself, then an intraday bullish reversal can come. The stock market might not or it will not wait for to see the K and D 0, because intraday it has seen that the K and D both are 0. Then intraday itself it will give a very heavy bullish reversal, okay. So 10:30 AM, okay, I will update you through the first update, okay, whether this is happening or not. Now the bearish reversal, so the not the bearish reversal but the bearish movement. Now the bearish movement will be limited to what? Limited to 4291. As I mentioned, 4291 is the, okay, this is where it will be limited. But before 4291 it will be limited to what? It will be limited to 4312. What is 4312? 4312 was the 61.8% of the Fibonacci retracement level, okay. So when there comes a fall, it will be limited to, and this is what I'm saying, at max 4312 or 4291. As of now, with these kind of conditions, K is 0, D is going to be 0, we are not expecting a very heavy fall, okay, that will not be there. that will be there only and only if there comes a green candle on Monday. Even if it is like plus 0.01% on Monday, then what will happen in that case? It will make K will be non-zero, D will be non-zero, and this means now there is more room in the bearish side. It is heading to the 200-day EMA. 200-day EMA is as of now it is like 4216. 4216 is where the 200-day EMA is. Okay, so in that case it will be heading to 4216. Okay, so it depends particularly. So Monday will be very important. Monday and Tuesday. Okay, these 2 days will be very important, because these 2 days will define whether we are going to see a good bullish reversal, or whether it is going to form a trap, or whether this will happen or whether that will happen. So Monday, particularly Monday, is very important. Monday and Tuesday. Okay, so I will update you through the pre-market update, first, second, fourth update. Okay, to my Patreon community members. Anyways, these the levels, okay, are known. Now let's say the movement it comes like that. There comes a reversal in the S&P 500 on Monday, and S&P 500 remains bullish on Monday. Okay, or it closes as green on Monday. In that case, what will happen? In that case, we need to look into the closing. Where is the closing? Because if the closing comes above 4371, then that is that is the first part where we can say, okay, that the S&P 500 can sustain, okay, or can try to sustain. If the closing comes above 4396, in that case, yes, now there are chances that the S&P 500 will be moving towards 4425. Okay, so that will be the only exceptional case, right? So it will be moving to 4425. Now when it moves to 4425, and if there comes some change in the technicals in between through the lower level charts, it will hit, it will give up, and then it will be coming down to 4216. Means the 200 or whatever will be the value of this, the 200-day EMA, it will be coming to the 200-day EMA, right? Now if it closes below 4396 but above 4371, in that case 4396, okay, should be the maximum. Okay, again it depends that how the Dow Jones, particularly in this particular case, how the Dow Jones is trading. Okay, and then only we will say, okay, that whether the 4396 will be the maximum and it will give up from 4396 or not also. Okay, so the closing will define, okay, what we are going to see and how, okay, the things are going to unfold. However, okay, as I mentioned that if it continues to come down, in that case it will be limited to 4312 or at max 4291. It will not breach 4312 or 4291 in this the bearish side, because it is already trading, okay, when the K is 0 and the D will become 0, so it cannot trade for very long, okay, with this kind of saturated technicals, the stochastic RSI. Okay, so this means that it will be limited. And when it hits the absolute K and D 0, then a very good reversal, very heavy reversal. Within a day we can see more than 1% movement, or like approximately 2% movement. Okay, that will be very heavy. Okay, and that will not be manipulated, rather that will be through these are technicals. Okay, manipulation is different. Manipulation means when something that is not defined through the technicals or the news or any economic data, and it comes like all of a sudden, like somewhere from this and it comes from the thin air, okay, and it changes the movement and everything. Okay, but it is not but it cannot be justified. Okay, that is the manipulation. So now guys, I hope that this is clear. Okay, that this is a bearish movement, the bullish movement we have discussed, the upward movement, 4425 level, 4446 approximately. This is not confirmed. Okay, I will confirm you on Monday. Okay, what will be this the level, and any movement will be this thing. Yes, there is one more thing. Okay, just one more thing, and this is, as of now, the S&P 500 is trading in the cloud. This is the Ichimoku cloud. Okay, cloud. Now because this is happening after many months, 4-5 months, whenever the S&P 500 comes down and it try to breach the cloud, it try to trade below the cloud, then this will not happen as such. And in order to confirm whether it is a trap or not, we need to wait for 2 consecutive or 2 successive closings. If there comes 2 successive closings below the Ichimoku cloud, then only it will be confirmed, or then only it can be trusted. But if there comes only 1 closing below the Ichimoku cloud, and then the next day the closing comes again inside the Ichimoku cloud, this means that it was a trap. Now it is going to give a good bullish reversal, and then in the second time, okay, okay, it will try and it will be able to breach and sustain below this the Ichimoku cloud. Okay, so just beware of this, that trap. Okay, and guys, if you have any questions that you want to ask, okay, then please feel free to ask your questions through the comment section. And if you have liked this video, then hit like. And once again, if you want to join my Patreon community in order to get these the daily updates, the daily analysis of the S&P 500 from Monday through Friday, as well as these the stock market opportunities in the premium stocks, okay, minimum 5 to 10, okay, every week, then you can join my Patreon community and you will get the daily updates, the daily analysis. You will come to know what is happening, okay, and what is not happening, what is true, what is trap, and everything. So I have given the link in the description of the video and also in the comment section. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. So this was my S&P 500 technical analysis from August 21st 2023, that is Monday, through August 25th 2023, that will be Friday.